The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. From iconic brands like Rolex, Omega, and Patek Philippe to the growing appetite of vintage and pre-owned pieces, the watch market has evolved into a serious alternative asset class for collectors and investors alike. But that market is now facing a major shock. Just days before a widely anticipated tax on all copper imports took effect, the U.S. administration made an unexpected move, not on copper, but on Swiss watches. As of August 7, the 39% tariff is being imposed on Swiss-made watches imported into the U.S., up from the previous baseline of 10%. This sharp hike in duties has caught the industry off guard. Analysts are warning of price hikes across new inventory, potential supply chain disruptions, and a surge in demand for pre-owned watches already within U.S. borders. At the same time, investors are asking, could this disruption create new opportunities or risks in an already volatile market? Well, to find out more, joining me now is Joseph Ng, who's Executive Director of Watch Capital. Joseph, welcome to the show.
Hi.
Thank you so much for joining us. Well, Joseph, let's start with the big news here. How significant is this 39% U.S. tariff on Swiss watches, and what's the immediate impact on the market?
Yeah, it's very significant. Given that the U.S. is the biggest economy in the world and that it is a major consumer market for luxury watches, we'll definitely see a price increase not only for new watches, but also in the reseller market. It also conveniently gives the brands an excuse to raise prices in other countries as well to combat these tariffs. Therefore, I believe watch prices should rise accordingly.
So how are brands and retailers reacting to this sudden policy change? Are we seeing price adjustments already on the ground?
As of now, there's no official news that brands and retailers are increasing their prices yet. However, I think they should implement the increase in price soon, as a 39% tariff is a hefty one. So given that Swiss watches are already costly to produce since they are handmade and assembled, the extra tariff would eat into their profit margin and should force them to raise their price accordingly.
Well, do you expect this tariff to dampen demand for new Swiss watches in the U.S., or will buyers simply shift to, the pre-owned market?
It really depends if the brands increase their retail prices in foreign countries. It really depends if the brands increase their retail prices in foreign countries accordingly. If they do not, then the demand of new Swiss watches in the US will definitely decrease, since more tariffs mean lesser purchasing power. It will be cheaper to take a flight out to purchase their desired watches, since their money is worth more overseas compared to the US. The tariffs will also have a negative impact on authorized retailers, given the decrease in the profit margin by brands and expected decrease in demand for watches due to the price increase. Furthermore, this is already evident before the implementation by the drop in their share price after the tariff announcement. For example, Watches of Switzerland Group fell by around 6% after the tariff news broke.
Okay. Well, then from an investment point of view, could this tariff unintentionally boost the value of watches already in the U.S.?
Yes, definitely. Given that people are expecting a price increase coming, value of watches are set to rise in the short run, as they are going to be worth more than what they were in terms of monetary value compared to before the introduction of tariffs. But whether the increase in value of watches is permanent in the long run will also depend on the strength of the demand for watches.
And could we see consumers or investors start, hoarding inventory pre-tariff? Is that already happening?
In the short run, I do not think so, as it is still unpredictable given that Trump may reverse his decision or put it on hold again like he did previously. However, if the tariffs are permanent, we should see consumers and investors hoarding inventory, since they are unable to buy watches again at a cheaper price, and should cause a drive up in watch prices. Nevertheless, it is worth noting that inventory may not always be the best thing to do, as it increases the chances of a bubble forming and market flooding, meaning that after a certain point, when it becomes a buyer's market, prices fall sharply, as evident after COVID.
Well, you mentioned that none of the retailers have yet to announce any price increases here, but how is the secondary market absorbing this moment, and are resale prices already ticking up?
Yep, in the secondary market, prices have been creeping up slightly over the last 1 month, and tariffs could be one of the contributing factors. On our side, we have seen prices, depending on the brand and model for new watches, it could also increase more dramatically in the coming months if tariffs are permanent and if they increase their retail price. However, on the other hand, pre-owned timepieces have been relatively stable. And another factor that could also be contributing to this is because the festive season like Christmas is coming up, so demand for watches are less price sensitive.
Right. Are there particular brands or models you think stand to benefit the most in value from this tariff disruption on Swiss watches?
I think watch brands should benefit, as a price increase should have some effect of increasing the desirability of luxury watches, as it increases the barriers to entry to owning a luxury watch. But I believe brands that have a global presence and have many stores globally, like Rolex, Patek, Audemars Piguet, should more, because they can actually adjust their price globally according to the tariffs to increase their profit margin. And despite the US being a major market for watches, the combined effects of other regions such as Asia, Europe should benefit the brands more.
Right.
The price elasticity of demand is also a significant factor when considering whether the brands financially benefit.
So how should investors approach this moment then, Joseph? Is this a buying opportunity or a reason to be cautious?
It depends on how big their risk appetite for watches is. For some, it may be considered a buying opportunity because they're expecting prices to go up in the future. However, I believe it could be more of a reason to be cautious given how the watch market increased sharply during COVID in 2020 and 2021 and collapsed and corrected equally as fast in 2022 after. And it may also be too early to tell given the unpredictability of policy changes.
And do you think this tariff will permanently shift investor sentiment, though, toward pre-owned over new watches?
It depends on personal preference. So some people may prefer to purchase their watches new, while others are fine with pre-owned. Investors are also likely to purchase watches that trade above their recommended retail price. So if they can get their hands on rare watches at retail price, then there's no reason to shift to pre-owned watches. However, if you purchase pre-owned watches from resellers like us, you do tend to save about 8 to 20% depending on the age of the watch compared to new watches in the secondary market.
Right.
So in that perspective, yes, there should be a shift in investor sentiment towards pre-owned watches since they're getting more of their money's worth.
And before we let you go here, Joseph, what advice would you give to new investors entering the market now, especially in light of this U.S. policy shift?
Yeah, but I think it would be better to purchase watch models that have been discontinued by brands because prices tend to be much more stable for such watches and less susceptible to policy changes. Since they are also out of production, the supply of these watches in pristine condition will only continue to shrink in the future.
All right, some great insights from you there. Thank you so much, Joseph, for joining me today.
Yeah, thank you for having me.
Thank you. That was Joseph Ng, Executive Director of Watch Capital. This has been The Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.